7 best stock markets since 2000. What if I told you that the US stock market wasn't even close to being the best performer over the last 25 years? While everyone obsesses over the S&P 500, 7 stock markets around the world have been quietly crushing it, delivering returns that would make Wall Street jealous. Some of these winners might shock you. One comes from a country most investors completely overlook. Another survived multiple economic crises and still came out on top. And here's the kicker. The patterns behind these winners reveal something crucial about where opportunities might emerge next. Stick around, because by the end of this video, you'll understand why geographic diversification isn't just smart, it might be essential. We're counting down the 7 best-performing stock markets since the year 2000, ranked by their broad market index returns. These aren't individual stocks or cherry-picked winners. We're talking about entire national markets that have delivered exceptional returns to investors who simply bought and held their main indices. Before we dive in, past performance does not guarantee future results. Investing in any market carries significant risks, including the potential loss of your entire investment. The markets we're discussing have also experienced substantial volatility, political instability, currency fluctuations, and economic crises. This video is for educational purposes only and should not be considered investment advice. Now, let's reveal which markets have led the pack. Number 7. The United States. Index S&P 500. Approximate total return since 2000. 613%. About 8% annualized with dividends reinvested. Yes, the world's largest economy makes our list, but perhaps surprisingly, not at the top. Despite weathering 2 major crises, the dot-com crash and the 2008 financial crisis, the S&P 500 has delivered solid returns to patient investors. Success factors. The U.S. market's strength stems from several pillars. First, innovation dominance. American tech giants like Apple, Microsoft, and more recently Nvidia have revolutionized entire industries. Second, the deepest capital markets in the world, providing unmatched liquidity and transparency. Third, strong rule of law and property rights protection. Fourth, the dollar's reserve currency status, attracting global capital. Finally, a culture that embraces entrepreneurship and creative destruction. The 2000s, 10s, and 2020s saw remarkable concentration in mega-cap technology companies. The so-called Magnificent Seven tech stocks have driven a disproportionate share of market gains in recent years, raising questions about future diversification. Risk factors. Market concentration in a handful of stocks creates vulnerability. High valuations compared to historical averages suggest lower future returns. Geopolitical tensions, particularly with China, could disrupt supply chains. Additionally, rising government debt levels and potential currency devaluation pose long-term concerns. Number 6. Indonesia. Index. Jakarta Composite Index, IHSG. Approximate total return since 2000. 850%, plus about 9.5% annualized. This Southeast Asian archipelago nation has transformed its economic landscape over the past 25 years. The Jakarta Composite Index has delivered impressive returns, making Indonesia one of Asia's standout performers. Success factors. Indonesia's rise reflects powerful demographic trends. With over 270 million people, it's the world's 4th most populous country, and a rapidly expanding middle class has fueled domestic consumption. Natural resource wealth, including coal, palm oil, and nickel, critical for electric vehicle batteries, has provided economic tailwinds. Infrastructure development under successive governments has improved connectivity across the island nation. Political stabilization after the late 1990s crisis created a more favorable business environment. Finally, participation in global supply chains, particularly in manufacturing and commodities, has boosted exports. Risk factors. Commodity dependence makes Indonesia vulnerable to global price swings. Corruption and bureaucratic inefficiency remain obstacles to doing business. The archipelago faces significant climate vulnerability, from rising sea levels to extreme weather events. Currency volatility can erode returns for international investors, and political transitions always carry uncertainty. Number 5. Brazil. Index. Ibovespa. Índice Bovespa. Approximate total return since 2000. 1,100% plus, about 10.5% annualized with dividends. Despite notorious political turbulence and economic crises, Brazilian equities have rewarded patient investors. The Ibovespa index has delivered returns that surprised many skeptics. Success factors. Brazil is an agricultural powerhouse, the world's leading exporter of soybeans, coffee, and sugar. This positions it favorably as global food demand rises. Vast natural resources, including iron ore and oil, provide export revenues. A large domestic market of over 210 million consumers supports internal growth. The country has developed sophisticated financial markets, particularly in São Paulo. Reforms in pension systems and business regulations have improved the investment climate, albeit with setbacks. Risk factors. Brazil illustrates emerging market volatility. Political instability and policy unpredictability create investment uncertainty. High inflation historically plagued the economy, though recent years have shown improvement. Income inequality and social tensions can erupt into protests. Environmental concerns about Amazon deforestation attract international scrutiny. The Brazilian real has experienced significant depreciation periods, impacting dollar-denominated returns. Number 4. Taiwan. Index. TAIEX. Taiwan Capitalization. Weighted Stock Index. Approximate total return. Since 2000. 1,400% plus, about 11.5% annualized with dividends. This technology powerhouse has delivered phenomenal returns, driven by one of the modern world's most critical industries. Success factors. Taiwan's success story centers on semiconductor dominance. Taiwan Semiconductor Manufacturing Company, or TSMC, produces the majority of the world's advanced chips, making Taiwan indispensable to global technology. The entire ecosystem supporting chip production, from design to testing, creates a competitive moat. Strong ties with Western technology companies ensure continued demand. Significant investment in research and development maintains Taiwan's technological edge. Additionally, a highly educated workforce and strong intellectual property protections support innovation. Risk factors. Geopolitical risk dominates Taiwan's investment profile. Tensions with mainland China create existential uncertainty that can spike at any moment. This concentration in semiconductors, while profitable, creates vulnerability to industry cycles. Supply chain disruptions during the pandemic revealed fragility. Water scarcity issues threaten chip manufacturing, which requires enormous quantities of ultra-pure water. Any conflict scenario would be catastrophic for investors and the global economy. Number 3. India. Index, Nifty 50, National Stock Exchange of India. Approximate total return since 2000, 1,600% plus, about 12% annualized. The world's most populous nation has seen its markets soar, fueled by demographic dividends and economic reforms. Success factors. India's 1.4 billion people, with a median age under 30, represent an enormous growth opportunity. Digital transformation has bounced traditional infrastructure limitations. India leads in mobile payments and has built remarkable digital public infrastructure. Economic reforms, including the goods and services tax and bankruptcy code improvements, have enhanced the business environment. A thriving services sector, particularly IT and business process outsourcing, generates substantial export revenues. Entrepreneurship and startup culture have exploded, creating new wealth. Government initiatives like Make in India aim to boost manufacturing. Risk factors. Infrastructure gaps remain despite improvements. Power, water, and transportation challenges persist. Bureaucracy can frustrate businesses. Income inequality is severe, with wealth concentrated among elites. Religious and political tensions occasionally flare. Banking sector health has been questioned. Following various scandals, currency volatility affects foreign investors. High complexity of doing business across India's diverse states creates operational challenges. Number 2. Denmark. Index, OMX Copenhagen, 25, formerly OMX Copenhagen 20. Approximate total return since 2000, 1,900% plus, about 12.5% annualized with dividends. Wait, Denmark? Yes, this small Scandinavian nation has been a powerhouse of consistent returns, shocking many investors who overlook European markets. Success factors. Denmark's success reflects quality over quantity. The country is home to world-class companies like Novo Nordisk, whose diabetes and weight loss treatments have become global blockbusters. Maersk dominates shipping and logistics. Strong healthcare and pharmaceutical sector expertise provides stable growth. Robust institutions, minimal corruption, and transparent governance create investor confidence. Innovation in green energy and sustainability positions Denmark for future trends. High education levels and productivity support high-value industries. The Danish krone's pegged to the euro provides currency stability. Risk factors. Small market size limits diversification. Performance depends heavily on a few large companies. High valuations following recent success may limit future returns. Exposure to global shipping exposes Denmark to international trade cycles. High taxes and wages increase business costs. Climate policies, while forward-thinking, require significant economic adjustment. An aging population creates fiscal pressures. Number 1. Egypt. Index, EGX30, Egyptian Exchange Index. Approximate total return since 2000, 3,700% plus, about 15.5% annualized with dividends. Surprised? Most people are. Despite political disruptions, including the Arab Spring, Egypt's stock market has delivered exceptional returns to those willing to navigate the volatility. Success factors. Egypt's strategic position controlling the Suez Canal provides consistent revenue from global shipping. About 12% of world trade passes through this waterway. A large population of over 100 million creates substantial domestic market opportunities. Natural gas discoveries, particularly the Zohr field, transformed Egypt into an energy exporter. Tourism, centered on ancient wonders like the pyramids, generates crucial foreign exchange, economic reforms, and currency devaluation, while painful, improved competitiveness. Government megaprojects in infrastructure have modernized the economy. Young demographics support long-term growth potential. Risk factors. Egypt exemplifies high-risk, high-reward investing. Political instability remains ever present. The 2011 revolution and subsequent turbulence showed how quickly situations can deteriorate. High government debt levels limit fiscal flexibility. Currency risk is substantial. The Egyptian pound has experienced major devaluations. Regional conflicts can impact tourism and investment. Water scarcity, particularly disputes over Nile River access with Ethiopia, poses existential threats. Corruption and bureaucracy impede business efficiency. Human rights concerns attract international criticism. Conclusion. So, there you have it. The 7 best-performing stock markets since 2000. From Egypt at number 1 with an astounding 3,700% total return, to the United States at number 7 with a respectable 613%, each market tells a unique story of growth, resilience, and opportunity. Several themes emerge from this analysis. First, emerging markets can deliver extraordinary returns, but with extraordinary volatility. Second, demographic trends, young, growing populations, create powerful tailwinds. Third, natural resources and strategic geography still matter in the 21st century. Fourth, technological innovation, whether in chips or pharmaceuticals, drives modern wealth creation. Finally, smaller markets can outperform giants when they host world-class companies. But here's what's crucial to understand. These returns were not delivered smoothly. Every single market on this list experienced periods of gut-wrenching declines. Investors who panic-sold during crises missed the recoveries. Successful investing in these markets required conviction, diversification, and emotional discipline. The next 25 years will undoubtedly bring surprises. Some of today's winners may stumble. New champions may emerge from unexpected places. The key is understanding that global opportunities exist beyond your home market, but they require research, patience, and risk management. Share your thoughts on this video in the comments. Which market surprised you most? Do you invest internationally? If you would like to receive more content like this, or if you would like to help others find this channel, please subscribe. Thanks for watching, and remember, invest wisely, diversify broadly, and never risk more than you can afford to lose.